Our panel discussion will be all about agility in ASEAN, resilience amid shifting sands. So once again, we would love for the panel to be as engaging as possible. You're welcome to turn your badge around, scan that QR code, and submit questions along the way. I believe he'll be referring to them and getting the questions too. A reminder for our virtual attendees that you can click on that Q&A button and submit your questions. If we can't get to your question today, we will of course try to address them by making sure your relationship manager and your global markets sales representatives respond to you after today. We trust you've had a great morning so far. Lots of insights shared today, and I think plenty of fruitful discussions are going to be taking place over lunch too after our break. You can take this opportunity while we've got a few minutes and we are turning the stage over to scan that QR code if you've got any thoughts and any questions as well. Just going to give us a couple more minutes before we invite our moderator back on stage. Kun Hao will be our moderator again. He's all set and ready to go. Fantastic. All right, I do believe we are ready to welcome our panelists up on stage. Kun Hao is ready and ready to rumble. Our first panelist, with a warm round of applause, ladies and gentlemen, please join me in welcoming Miss Carol Fong, Group CEO, CGS International Securities. Welcome, and thank you for joining us this morning. Our second panelist, Mr. Kevin Neo, CEO, Keppel Infrastructure Trust. And last but certainly not the least, our final panelist, Mr. Bruno Lopez, President and Group CEO, ST Telemedia Global Data Centers. I'm excited for this discussion. Please take your seats. And Kun Hao, the stage is all yours whenever you're ready.
Charmaine. Okay, ladies and gentlemen, this is the final 1/3 of the morning. I promise I'll do my best not to overrun, that all of us can make it out for lunch on time. So this is a very high-powered panel here because all three distinguished guests are all CEOs sitting on my left. So if I may just introduce them again, we have on the far left of the stage, Mr. Bruno Lopez, Deputy CEO of ST Telemedia, and CEO of President and CEO of ST Telemedia Global Data Centers. Bruno. Thank you. In the middle, Mr. Kevin Neo, CEO of Keppel Infrastructure Trust. Kevin. And last but not least, the rose amongst the thorns, Ms. Carol Fong, Group CEO of CGS International Securities. Okay, so I guess the first obligatory question to ask all of you is, you have heard all the very negative adjectives being thrown this morning, right, to describe 2025. Prof. Chan, rocky year, right? Unpredictable year, volatile year, right? In your opinion, in each of your respective industries, right, data centers, capital markets, sustainable developments, what is the singular most worrying thing that keeps you up awake at night for 2025? Maybe we'll start with Bruno. Yeah.
Thank you. Thank you for the opportunity to share some insights, which I feel a bit concerned because the room is full of people with a lot more intelligence than me. So I think if there's one concern that comes to mind, and it is on the back of what Prof. Koh and Prof. Chan had shared as well, is the whole tariff situation. Now, the tariff situation is quite different for the data center business. I believe there is the next Cold War is the AI Cold War. And that AI situation is unveiling itself in front of us even as we speak. And even last week, a new law has been proposed by the Biden administration to create a licensing regime for the availability of AI chips and GPUs. globally. What does that mean? There's a class of 20 that has preferential access to AI chips without any prohibitions. And it is all the allies and friends of the US. Singapore is not in that list. Neither is any Southeast Asian, neither is India. A lot of our countries are not on that list. It's in the second tier, which means that access to that technology is going to be limited. It is if you are a friend of the US, you get access. If you're not, I will control the access. And this will apply to the most sophisticated AI chips that are coming to market today with NVIDIA, AMD, etc. They control 90+% of the market. So, and then there's the third category of banned completely, no access. And that, of course, China, Russia, and a lot of other countries you would expect are in that list. Now, I think that's the war that I'm a bit worried about. Not so much the physical war, because once that war comes to play and you do not allow access, free access to technology, and this technology is going to be revolutionary. We all know that. It is no longer, it is undeniable that it is an intelligent world that we are coming into. And if you constrict the access to countries, economies, the ability to grow, to leverage this technology in the best way possible for their economies, for their national agendas, etc., you will cause a lot of unhappiness, to put it mildly. So if there's something that's going to unveil itself very strongly, is this regulatory framework and this licensing that potentially will come true if the US, if the Biden administration's plans gets followed through by Trump, which we don't see any reason why it wouldn't. In fact, we thought it would come later, but it's come earlier. So one worry, so to speak.
Okay, so here's if I can just reassure everybody, we start with all the negatives, we'll proceed to the positives later on, okay? So Kevin, next worry that keeps you up awake at night?
All right, thanks UOB for inviting me to this seminar. I think one thing that kind of keep me up awake at night is basically, I think, the uncertainties in the world. Hello, testing.
Yep.
Right, so it's basically the uncertainties in the world, right? So I think KIT, we invest in and we own critical infrastructure, essential services, things that's required day in, day out. So we are less concerned about what goes on a day-to-day basis. But what we are concerned about is what happens on the macro arena, right? You have Donald Trump coming to back to office again in a few days' time. You have the slowing China story. It's, I think, anyone's guess as to when they will recover or how they will recover. So, and this will probably cause turmoil in the macro markets, in the capital markets. And that's something that I personally dislike because it's outside of my control, right? But again, this is something that I think we need to watch out for. Share prices could be volatile for reasons that is outside of every company's control. But I think we just need to be able to react, right? If the world is going that direction, how do we best position ourselves to better our companies, get ready, right, for the next wave that may come. So I entered 2024 with actually a lot of high hopes, hoping that interest rates would come down. It didn't happen.
So, sorry to disappoint you.
Yeah, it did. Interest rate came down a lot slower than we expected. And sometime 3Q last year, or even 4Q last year, I was hoping that 2025 would be better, right? Then it looks like 2025 will be somewhat like 2024. So, and I think we probably just need to be prepared. And hopefully when the time comes, when the wind blows in the right directions, we are able to catch that wind and move forward.
Thank you, Kevin. Carol, so you're in the securities business, capital markets. I'm sure you have a lot to say about interest rates being sticky. So,
Okay. First of all, thank you very much. Can I do a sound check? Can you? First of all, I'd like to thank UOB for having me on this forum. I think it's very interesting. What keeps me awake at night first? I'd say two words: black swans. But actually, because of the fact that there are black swans, you don't have to worry about it because you can't predict it. But in all seriousness, I think that if you look at the business of capital markets itself, I think that how you sustain and maintain your business in what we call the VUCA world is what we have to worry about. And what's VUCA? We are increasingly in an environment which is volatile, uncertain, complex, and ambiguous. So as a business, especially in capital markets, as Kevin said, markets go up and down and all that. And how then do you actually keep your business sustainable? How do you keep your people happy and loyal to you? So that's what really, in my mind, would be one of my worrying factors. Interest rates going up and down, you take the longer term view, you learn to deal with it.
yes.
Whether the interest rates go up and down, then you come up with strategies that actually will then either deflect or emphasize the strategies that you need to do to deal with that. So I'll come on to the more positives later on.
Okay.
Yeah.
So I think on the topic interest rates, I was in Hong Kong last week, and clearly, anybody doing business in Hong Kong will be very sensitive to interest rates, given how the economy is structured. HIBOR is very sticky up there, and a lot of conversations will be, life goes on. All the businesses deal with it, right? So if interest rates are going to be sticky and high this year, we will adopt a different set of strategies to our growth plans, to our investment plans, and life goes on. So that was the key takeaway I got from Hong Kong last week. So moving on, again, ladies and gentlemen, I am watching your questions here. Again, do put in your questions for the three panelists. No questions on P&L, please. We will not entertain those, but objective questions about the industry that they're in, data centers, right, sustainable development, and capital markets. Please post them through. First set of questions that I think are important in my point of view to dive deep into each of their industries. So Bruno, first one goes to you. You're in the best spot right now, I think. Your industry is having what I would call a love attack by all investors, right? Big and small, private and public. Every time Jensen Huang goes up to stage, the value of the industry jumps, right? There's huge FDIs, capital investments into data centers, into digital innovation past few years. Of course, questions being asked, what's next? What do you think is the next mega trend, the more important thing for your industry? Bruno.
I think you're right. There's a lot of FDI coming into this sector. And in this region, Southeast Asia, ASEAN, you've seen a lot of that, especially in the, Singapore, we have the moratorium, so we can't really address that big time. But in Malaysia, Indonesia, and Thailand, you're seeing a lot of that push coming into that. But I always look at it, and we are, STT GDC, we have 100 over data centers and in 11 countries, etc. We're quite cautious when we look at this. You always worry that where angels fear to tread, fools rush in. You have to be careful that you don't build this infrastructure and be ready for what's coming. What do I mean? If you look at the infrastructure that's being spent on AI today, and I think the promise of AI is undeniable, right? We know it will change every facet of the way we live, from generative AI to simulation AI to physical AI, robots, etc. It will change a lot of the way we do things, and businesses are changing. But there's a huge infrastructure gap, especially in ASEAN. If you think about it, there's not enough power to fund all the data center requirements that's needed or that's being touted by everybody that they're building in the next 3 to 5 years. And countries, governments are struggling power companies are struggling to find the solution to solve this. The challenge is we are being forced to do it more sustainably. And that's even a problem. So there is a conundrum here. Everybody is using data like there's no tomorrow, but at the same time, there's not enough infrastructure to meet all this. But you can't tell your kids to say no more TikTok videos and no more Facebook or everything that, or, Instagram. Sorry, Facebook's not important these days. The kids, Snapchat and everything else. So I think that's the challenge. So we are challenged to work through that. So you need to deliver. We have committed to be net zero by 2030 for everything we do in data centers. For close to 2 gigawatts that we are building and operating, that's a big commitment. And it's tough. And so our competitors, our fellow peers are finding the same challenge. So this is going to be that huge problem that we will have to deal with. But the opportunity is real because AI for ASEAN alone, some stats say, it will grow the GDP by 13 to 15%. $1 trillion US dollars in the short term. But there is a huge that infrastructure gap. And there's also a huge skill gap in terms of people. There's just not enough people who are data scientists who have been doing, everybody wanted to be bankers. The last cohorts of people, but the STEM guys are less, much less in these economies that require this. So you can't really develop your large language models or your inference learning and everything else if you don't have the people converting all your applications to become AI ready. So that's going to be that gap, but it's coming. So we need to get ready. And the opportunity, a positive, is that it is real, it's not going anywhere, but a lot of the infrastructure investment will not see the fruit so soon. So that's the balancing act.
Okay, so thanks, Bruno. So I guess it's a very good segue into what Kevin's world, right? So on one hand, we need a lot of power, electricity. On the other hand, how do you stay green and not, for lack of a better word, mess with the environment? So Kevin, in your space, I think the key word is sustainable urbanization, right? Keppel Infrastructure Trust has over the years, across all the different regions, Middle East, Europe, Asia, built up this whole series of sustainable assets, right, in urban centers. Whether it's waste to energy management, whether it's offshore solar farms, whether it's gas pipelines, new water plants, desalination plants, the list goes on. So the question is, after this few years, again, there's a recurring theme here of explosive growth. What's next in the sustainable urbanization space?
Yeah. Before I go into that, I think Bruno mentioned that there is a lot of infrastructure CapEx requirements needed. And I think capital is hard to come by. But for KIT, I think we are more than happy to fund them. Right? But I think for us, I think the challenge is to find the right capital projects. So we focus a lot on sustainable urbanization. The world, including ASEAN, will urbanize. It's inevitable. Right? People will need more data. My wife is one of those that contribute to that. And people require more energy. And not just more energy, but clean energy. So which is why KIT, I think in the last 3 to 5 years, we have been investing in green energy, wind farms, onshore, offshore, solar farms, and so on. And that's something that we want to continue. But green energy is not something that every economy or every country can access to. Right? Some countries just are not ready. So we need a transition fuel. Gas is very important. But what is more important is to build infrastructure that can actually transition to cleaner fuels. So we build gas-fired power plants right now. In fact, Keppel Group, we are building Singapore's first hydrogen-ready gas-fired power plant. So it will fire gas at the start. When hydrogen is ready, we'll transit over there. KIT, we own another gas-fired power plant at Jurong Island. It's gas-fired. But I think consistently over the years, we've been putting in CapEx to get it hydrogen ready, right? So when hydrogen is coming in, more than happy to fire hydrogen to produce the power that the economy require. We see a lot of digital infrastructure required, be it data centers, mobile towers, fiber networks, and so on, because the world, there's so much Netflix out there in the world, people, Instagrams, etc. And the amount of data flowing around is a lot. So you need that entire backbone, that entire infrastructure to support that flow of data. But I think the question is how to do it in a very sustainable way, right? I think you can build data centers, you can build mobile towers, you can build fiber networks, but you need a clean energy source to power that. And so this is where companies with in both sides of equations will probably have an advantage. Keppel, we can build data centers, we can also build on bringing clean energy. So we're probably quite well positioned to put these two together and present a very holistic solution to our clients, partners, and so on.
Okay, I think there's a conversation going on there. Please continue the conversation, gentlemen, off stage later on. So Carol, again, segue into you, capital, right? If I can say it candidly, last year, for all of us in this room, if you have invested in the United States, then I think you have done very well. And suffice to say, if you have not invested in any US equities, it's the other way around. The change in the structure of capital markets is so significant that the US is taking up a lot of investment flows and basically in the debt market as well. Some call this the US dominance, which is true. It is happening now, the innovation, the capital structure. So question to you, Carol, is do you see more of the same this year or you see a very different trend? If I can throw in a little more question, any stock picks for all of us here? Carol?
I think that you're quite right. I think that probably everybody in this room has invested in the US market. I mean, that has been a strong performer. And the question really is that will the US continue to outperform? And I think that as anyone knows, and UOB, of course, will be best positioned to advise clients on this, diversification. We always say that you have to diversify your risk. You just cannot concentrate on US economy and China and so on. You got to diversify your portfolio. And that's why I think that ASEAN actually has got a very, very, very strategically actually placed in 2025. And why do I say that? It's because of the fact that we know that, Mr. Tariff and as well the fact that geopolitical tension, inflation rates are up, US, China on each other side. You have ASEAN, then actually, I would think it's at a very sweet spot. It's a sweet spot because of the fact that you have China looking outwards to achieve their Belt and Road initiatives, the China +1 national agenda and so on. You see the investments going out, for example, into ASEAN. In particular, I think recently, you can see the semiconductor, they've diversified to Vietnam, into Malaysia, Chinese manufacturers, BYD, now they are conquering basically Malaysia, even Singapore, as well as Thailand. On the US side as well, you can see the investments they've made in ASEAN have been actually very high. I mean, you've seen announcements made by Microsoft. Micron just recently announced in Singapore the US $8 billion investment here.
Yes.
A couple of months ago, I think there was NVIDIA who went down to actually make a big investment in Malaysia as well. So that's why I think ASEAN actually is a sweet spot. And I would say that that if you were an investor, I would advise you to put some money in ASEAN, UOB Bank, maybe. Yeah. But again, if you look at the dynamics, the structure of the marketplace, right, and you look at Singapore, for example. So if you look at ASEAN itself, if you are talking about where I place the bets, we go macro first, right? I would say Singapore and Malaysia are my two best picks, followed by, I think that Thailand and Indonesia you have to be a little bit careful of. And why Singapore? Singapore is because I think if you look at the earnings yield, I think it's the earnings growth will be quite strong this year. At the same time, the yield of most stocks is averaging about 4%. Okay, and some of the ROEs of major financial institutions, major companies, are about 12%. I was just chatting with Kevin earlier on, and he was telling me that his company has got a yield of 8%, and that means to say, and he thinks that actually the longer-term sustainable rate should be 4%. So what does that mean? The share price will go up. So please go buy Keppel Infrastructure Trust after this. but really, I mean, that's Singapore, right? So that's why I think that I'm still quite sanguine about Singapore's growth prospects, right? And then, of course, if you look at Malaysia, the China Plus One strategy, a big beneficiary.
Indeed.
And last year, they had the largest number of IPOs, about 45 IPOs. This year, they're slated for more as well. Because we operate on, I mean, we are a dominant player in the whole of ASEAN. So we are really on the ground, so we can kind of see where the dynamics are. And I think Malaysia, I think that is well placed, to do well this year as well. I think earnings growth will continue to be strong. And between Malaysia and Singapore, I think no one has talked about the most recent, our Johor-Singapore Special Economic Zone.
Yes, the SEZ.
That will benefit both countries. And then, what do you buy when you want to basically be a participant to the Special Economic Zone? And recently I was in Malaysia. I attended because we were sponsored to the Ministry of Economy's, the Forum Economy Malaysia. And something that Minister Rafizi said I thought was quite interesting. He actually said that there's no special economic zone in the whole world that is sponsored by two governments, which is true. It's Singapore and Malaysia. So, I'm a big believer in ASEAN, and I think that's where we should place our bets. Indonesia and Thailand I'll be a little bit more careful of because of the fact that there are new leaders in place. And I think the currencies are the weakest of the countries, so I will be a bit more careful about. And we need to watch what strategies they have in place.
Indeed.
Vietnam, I think that I saw that Vietnam has strong economic growth and all that. But Vietnam, if you look at it, I think one has to watch out for the fact that if you look at trade deficit, number one trade deficit is China. Trade deficit is about, I think, close to US 280 billion. Second, actually, is Mexico. And the third is actually Vietnam at 150 million. And you look at 12, 13, and 15 is actually Thailand, Malaysia, and Indonesia. Thankfully, Singapore trade surplus. So I think that Singapore actually, to me, if it's any trade war and all that, it'll be relatively okay. But I'll be quite watchful about, if the US goes down to the second tier, Thailand, Indonesia, because they're still at 12, 13, 15. But Vietnam is the one that I think that there will be a lot of tension on because they have the third largest trade deficit with the US.
Indeed. So
Stock picks I will skip. I just promoted Keppel.
Okay. I guess just a gentle reminder, all investment comes with risk. Do your own homework in advance, please. Yeah.
Sorry, and UOB, of course.
I do agree with Carol. I think we all know by now, if there's one key important message this morning, it is ASEAN is the place to be, right? Right demographics, strong FDI inflows, strong intra-regional trade. So amidst all the uncertainties in the world, I think especially you heard from Prof. Chan, from economists, ASEAN is still rock solid and the place to be. Bruno, there's a question relating to China in your industry, and I think that is a continuation of a discussion about weaponization of your industry, GPU, AI chips. The question reads, your assessment of the global impact of US trade restrictions on China in the AI and tech space. How do you read that? I assume this question means, is it going to get worse? What are the goalposts we need to look at?
I mean, I'll reiterate that perception of the AI Cold War. That will be the way that it will translate itself. I think the benefit of this state-of-the-art chips and the fact that you have decided that America has decided that you will not make that available to China is going to be a challenge. And it will exacerbate geopolitical issues if you constrict and restrict the ability of access to technology. But I think China is 1.4 billion. We have an investment in one of the largest Chinese data center companies, GDS, and we know that they are very resilient. They can develop alternatives, perhaps not to the level of speed and execution that the NVIDIA chips or AMD chips will get to, but they will get there, perhaps replacing speed and sophistication of technology with volume. And, you know, they will do something. They're not going to sit by idly and expect that this AI world will develop without their influence and their input. And I believe that they will be there. And they will continue, like Prof. Chan said, it depends on your horizon. You're waiting 1 year, I think you have to wait. I think 3, 2, 4 years, 5 years, these things will play itself out. And the advantages the importance of the technology to the economies and to the businesses will outweigh some of these tariffs and trade wars and cold wars that could translate. Because that advantage is probably not going to be there forever, that the US have. So that's my view. I think I do believe that having been involved with the Chinese data center business now for more than 10 years, that it is going to come back. And it will come back. It's a question of being patient and seeing it through.
Indeed. So, I've read the book Chip Wars, Chris Miller. I think if you have read it, the message is very clear, right? Whatever has been thrown at China will only slow it down, but will not stop the advancement in technology. And there's a lot of details on how China can build around the restrictions to achieve the same requirement, perhaps not as efficiently, but China will get there. So moving on, perhaps another question here relating to the capital markets to Carol. So we all know China is slowing down, right? We are hopeful that China will recover, and China is looking at new ways to invest. So, you, in a sense, are very close to the Chinese investment community as well. So where do you see Chinese capital going next? Clearly, ASEAN is a key port of call, but what are they looking for in terms of growth?
I think that you're quite right. We're quite well positioned. For those of you who don't know our company, we're actually owned by Chinese right now and owned by CIC. But with a very strong ASEAN heritage, 45 years of history we have here, right? And I'll give you a simple example. When China was looking out, you're asking the question, what are they looking for? So when they bought into the CIMB's franchise, which is now CGS International, they were looking actually at purely Asian. So they told me that they're not going to Europe, they're not going to US, because they said they think it's difficult for them to manage, number one, and number two, they think it's too far away. And they felt that ASEAN is much closer to them. So that was a big statement that they made at that point in time. And I now go out to Beijing very often, and when I talk to corporates there and regulators and so on, it's the same messaging. That they are still looking to flow more investments from not only from capital markets but also from FDIs into ASEAN. For example, we are looking to set up a PE fund, and the interest that we get, especially from the semiconductor side and so on, for them to diversify their supply chain into ASEAN is definitely there. There's so many big semiconductor companies there, and interestingly enough, the chip war, we had him as a speaker, so I had the privilege of hearing him, and you're right. And Chris said that actually that you cannot stop China. At some point in time, China will move up the curve, so to speak. But where are they looking to invest is actually diversifying their supply chain, number one.
Yes.
And you can see that when they start moving, it's like a juggernaut, they will all move in one direction. And we are seeing a lot of interest of Chinese companies, not only on the private side, but also on the public side. On the M&A side, Chinese companies are definitely looking to invest overseas. So we have been given a number of mandates, for example, saying, I'm interested in this sector, that sector, and so on. Can you find me companies that I can buy? But of course, the risk is that you don't want to make it too Chinese-owned. You have to really then look how you structure something for them that they're not seen to be greenwashing, when they move over their supply chain to the other parts of ASEAN. But definitely the movement is into ASEAN, Asia. I think less so in Europe and the US.
So I want to build on this point by Carol. I get asked this a lot in all the conversations. Is China still investable, right? And my answer is yes, but not in China. Meaning if you still want to invest and ride on China's growth, invest in the different supply chains, the different industries that the Chinese are looking out of China, whether it's in ASEAN or anywhere else in the world, in that particular sector, in that particular industry where you see the Chinese coming up. And I think that's where the new growth energies of investing in China is. One question, I think, for Kevin, just to build on all this uncertainty in the new world. The past few years has been volatile. Again, back to that volatile theme, right? We had COVID, we had Brexit, we had armed conflicts in Ukraine and Middle East. And your industry, how should I say, has a very long gestation period when it comes to assets, right? Companies are forced to choose between flexibility and resilience. So how do you ensure that you are able to invest in all these long-term sustainable assets and grow them to fruition amidst all this noise that you see in all the geopolitics and everything else?
Yeah. So I think as mentioned earlier, KIT, we focus on investing and owning assets or businesses that provide an essential service or product to the economy, right? Or to the people. Things that's required day in, day out, things that's required regardless of the economic cycles, things that's required through COVID, things that's going to be required through trade wars. So, and we look for sectors that has very strong circular tailwind behind them, things that is not driven by short-term cyclical movements. So we take a long-term 10, 20 years view to that, and we invest in those sectors, in those markets. And, and I think I'll say that infrastructure, it works such that it's a pretty much localized business, right? Once you're in that area, you have a very strong dominant market position. And then once the demand grows, you just grow along with that. So it's all about choosing the right assets, choosing the right countries, being at the right place, and so on. I think one thing that I would say ASEAN requires, right, is, I would say ASEAN as a whole has all the ingredients, all the makings to attract a lot of foreign direct investments, right? There's a lot of capital to go around, but capital can be pretty fussy, right? And you want to be in a country, or the country wants to be in a position where you can actually attract the lowest cost capital available, right? It's not about grabbing as much capital, it's about getting the lowest cost capital. And in order to do that, you need to have a strong rule of law. You need to have very clear, transparent, stable policies. And these are the countries that KIT will invest in, so that we can actually take a very long-term view to that. Yeah.
Okay, so long-term capital that is accessible and hopefully as much of a low cost as possible. Again, we are way overrunning after 12, very mindful that we are in between everybody and lunch. Just one last question. I want to end on a very positive note to each of the three esteemed panelists. If you can plant and give us one positive point that we can look out for 2025, what should we look at? What should we work towards to? Bruno, maybe we can start from you.
I hope that I wasn't too negative about what's happening, but I will say that the opportunities for infrastructure growth in ASEAN is phenomenal. But you need to choose your battles, choose the grounds, and be patient, because the yield from AI is not going to happen in the next 1-2 years, but it is definitely coming. So it is not for the faint-hearted, and for those who are going to be there long term. So the opportunities are there.
So opportunities in infrastructure for your space. Okay. Kevin?
I would say, I think Bruno and I, we are somewhat in a similar industry. There's really a lot of infrastructure demands out there in the world, be it in the developed markets or the emerging countries. There is certain trends. There is clearly here to stay for a couple of decades. Energy transition, climate change, digitalization, urbanization, right? And once you capture the correct industry, I think you just grow along with that. And I think, and these are all basically very exciting sectors. They're actually galvanizing the economies, right? We have seen how a certain trend can actually just galvanize the entire company or even the entire country. So I would say the future is bright, right? Over the long term, right? For the infrastructure world or even for ASEAN in general as a whole.
Thank you, Kevin. Carol?
I would say that to me, it would be ASEAN will get stronger. And I fully endorse the view that, that ASEAN will become the fourth largest economic bloc by 2030. And if you look at what's happening for the last few years, you compare the last 5 years, you compare the last 20 years, you see the level of integration or cooperation within the ASEAN economies now is actually a lot stronger. Examples, our CEP. Okay, with our CEP playing the platforms, the countries are coming together to standardize practices, policies, and so on. Then, of course, you have the ASEAN Capital Markets Forum. And for the first time, I've seen them actually come up with initiatives that will actually, on sustainability, for example, standardizing some sustainability standards, looking at cross-border products, and even the exchanges themselves are coming together and see what they can do to promote ASEAN overall. So I'm a strong believer in ASEAN. And ASEAN will, I think, overall, we've been quite neutral. As Prof. Chan said, 1 foot here, 1 foot there. Sometimes the foot will be longer on one side. But overall, I think that ASEAN, the neutrality of ASEAN is actually a strong, I think, messaging and a strong place for us to play.
Okay. So I hope, ladies and gentlemen, you're taking note. I do see some of you taking notes together with Prof. Chan. We have a lot to look forward to in 2025. I guess I was asked to make a summary of orders. I think the year 2025 is clearly unpredictable and volatile, right? But we know that if we do proper risk management, we are aware of the risks that are coming. We should be able to manage this risk, and don't forget, that major recurring theme. Stay focused on ASEAN because that's our strength, that's our neighborhood, where we can count on each other, to ride through this uncertainty together. So on that note, ladies and gentlemen, a big thank you to Bruno, Kevin, and Carol.
A big thank you. A big thank you to all our speakers. If I could kindly ask that you remain on stage, please, and take a step to your left. I'd now like to invite Mr. Kelvin Ng, Head of Group Global Markets, to join us on stage as we present our guests and our speakers with a token of appreciation. Kelvin, please. Thank you. I'd first like to invite Ms. Carol Fong. Thank you so much for your time. A warm round of applause, ladies and gents. Wonderful insights there. And next, we'd like to present the token of appreciation to Mr. Kevin Neo. Fantastic. Thank you. Thank you again, Kevin, for your time. And last but certainly not the least, a token for Mr. Bruno Lopez. Thank you. Oh, yes. Thank you. Big smiles. While I have everyone on stage, perhaps you could stay for a group photo, please, with Kun Hao as well, down the center. Lots to look forward to in 2025. Many robust discussions that we've had in the room. I think we're all quite cautiously optimistic for 2025. Big smiles. Fantastic. It'll be a good 2025. I agree with our photographer there. Fantastic. A warm round of applause for everyone. I'd like to invite you back on stage. Mr. Kevin Ng, if I could ask that you remain on stage for some closing remarks, perhaps. Thank you.